It's official. The new mortgage rules are in place.
You look like Buddha.
That's not Buddha. That's delay a game.
All right, and how this affects all of us coming right up.
Hello, my name is Barry Horvath, and this is Moving Forward TV, your local real estate and mortgage update.
And I am DeLynn Gaston. Thanks for joining us today. So one question. If the new rules for qualified mortgage just went into place, what have we been doing for the last 5 years?
We've been watching playoff football.
Yeah, I know you.
And we've been waiting for hockey to come back.
That's clear that you've been watching football and stuff with your signals and all. But
Absolutely. Timeout, delay a game, by the way, not the Buddha.
Looks like a Buddha to me.
Touchdown.
All right, so what have we been doing?
Well, we just learned about this new little document.
Little? How little is that document?
802 pages.
Like most government documents, that explains to us what a qualified mortgage is. Those of us who have been doing this for 30 years apparently don't know.
And it was written by the CFPB.
Who is? Who is the CFPB?
The Consumer Financial Protection Bureau.
Better stands for can't fund people's bull.
She didn't say that. The 802-page document is official. We now know what a qualified mortgage is. And who does this rule protect?
Who does this rule protect anyway? Does it protect the consumers?
Well, it does say it's the Consumer Financial Protection Bureau.
So it says, but...
It protects the banks.
Go figure. Okay, so what exactly does the government mean by a qualified mortgage that it took them 800 pages to tell us?
802 pages.
802.
Don't leave those last 2 pages out. All right, since I am the official, but clearly you must know the rules.
Okay, so I'll rattle off the rules. Basically, the crux of the matter is that the government has come and said that banks and lending institutions are no longer allowed to give people loans unless they have an ability to repay. Well, duh.
So are you going to go over all 900 rules here?
Dang, should have had a V8. No, we are just going to hit on a couple of the top ones. First of all, can we do a no income verification loan?
Nope.
Mr. Official?
No. Wait, that's
Does that
incomplete.
mean no?
No.
All right. Can I do an interest-only loan to have my payments lower up front?
No.
No. Can I do a low teaser rate on some of those adjustable mortgages?
Like a neg-am loan?
Yes!
No.
No, silly me. And what if my debt ratio is more than 43%?
Get another job.
Or pay off your debt.
I think you should get another job.
Get another job. Yeah, but then I can't count that for 2 years. All kinds of things.
I know.
Pay off your debt. But anyway, those are kind of like the key of the rules. You have to be able to make your payments, duh. And this actually doesn't take place, though.
It doesn't take place till January of 2014.
Right, so we have a year anyway, and then they said it's a 7-year phase-in period on all of the other rules, which of course we'll keep you abreast of. So if the banks follow these new rules...
And these 900 other rules...
900 other rules that are in place, then they have met what is called the safe harbor requirements. Which basically means they have covered their tushy.
Their Buddha.
And that they have met the requirements for a qualified mortgage. That basically means that they have proven and verified the borrower's ability to repay the loan.
And get this, the consumer can still challenge their lender if they feel like that the bank didn't follow the guidelines or actually the rules that said, oh, I didn't meet a qualified mortgage.
Now, which sounds kind of crazy, but sadly enough, that's what's been happening in our industry, as you guys know. People find loopholes. Unfortunately, they find loopholes. And in the last several years, everybody took those no-doc loans and those low down payment loans and those low teaser rate loans. And I do agree, there was a lot of people who were duped. I'm not saying that they weren't. But there was also a lot of people who knew exactly what they were getting into, and they just did the loan because it was easier. Let's take take the no-doc loan. Let's do the no-income verification loan. And now they're suing the bank.
So they walk away from their loan.
Right.
And they don't pay it back.
They find these loopholes.
And they say, it's your fault, I didn't qualify.
So basically what the CFPB is saying is that as long as the bank meets all of these new rules that are in place, and the bank has proven that the person can pay their loan, then the banks are the ones who get the protection. So if
from the Consumer Financial Protection Bureau.
From the Consumer Financial Protection Bureau.
This makes a lot of sense.
Yes.
I'm
the
really
bank
excited.
is the one who is going to be protected in this new rule. Okay, and again, remember, all of this doesn't go into effect until January 1st of 2014, which means all through this year, the CFPB is still accepting comments and feedback and stuff.
So modifications are actually possible.
Yes.
From now until January 10th of 2014.
Right, so we have a voice. We can change these things.
And by the way, did you know that the Consumer Financial Protection Bureau is 100% funded by, guess what?
Fines.
Yes.
Banking fines. So tell me, they're not like looking to make sure every nook and cranny.
They're our friends.
You know, yeah, they're our friends.
They're our friends.
They are looking close to so they can all be, funded fully.
They're fine.
Anyway, if you guys want to reach out to us, any of this stuff, if you want to put your comments, reach out to us. Our phone numbers are here. Our emails are here. We have a year to change these rules. So this is the show. Share it.
Get
Facebook.
It out on Facebook, Twitter.
Right.
Share
all
it
that stuff.
Soon, like today, like now. Don't leave. Go do it right now. Hurry up.
We are today and every day.
Moving forward.
We'll see everybody next week. Bye-bye.